Before I start, I'm just going to say that first of all, it's exciting to be here, and seeing so many familiar faces, and talking about this very interesting subject, and also if you have any questions in the middle, please feel free to stop and ask. And it's kind of like we're kind of like brainstorming and transferring information. So if something isn't clear, if something you want to point out something, please feel free to do it. So as Maria said, we're going to be talking about the rise of cryptocurrencies and their impact on payments. And a little bit about myself. Yes, I'm a veteran of it's already 20 years. It's kind of embarrassing. I was the business development manager and product manager of LumiTrade, one of the biggest security trading websites. And I've been working also as COO in different startup companies around the world. One of them was Bancor. Originally, I'm a certified investment consultant for the Israeli Securities Authority with a programming background. And I work and advise with a lot of regulators and banks around the world and in Israel, and with enterprises on everything that has to do with moving ahead with financial technology and innovation in these fields. And I'm going to start with this lecture a little bit by zooming out and looking at our macro, I'd say, area, because I think that if we're looking kind of like at what's happening in the financial sector, we're seeing that there are various forces that are entering into this market. I mean, if 10 years ago we were talking about regulators and banks and money, everything was simple. It's not that way anymore. And we have many more players and many more technologies. And we're talking about a systematic entrance of the financial giants, including Google and Amazon and Facebook and WeChat in China. And there are new business models that are not related and relevant for commissions that we've gotten used to with the financial sector. We've had regulatory environment that is changing and trying to adjust to what's happening around us. And I think that the most interesting aspect of it is of what's happening is the technological developments that are happening around us. And they're happening in different areas. They're happening both in the tools that we're seeing and also in, I'd say, the fundamentals of what money is and what assets are and what kind of I'd say what kind of investment tools do we have. So if we're kind of like zooming into the payment sector, then we can see that exactly in this area of technological developments, we're seeing things that 10 years ago would have kind of like been I'd say perceived as science fiction. Digital wearable devices that can be payments, facial recognition for transferring the money, QR codes that you can see in China, even in the markets, chips that people are inserting into themselves. In Sweden, here you can see it, the person sitting in a train, and what he has is actually a chip that's installed into his hands. All of these things are happening around us, and I think that China and Sweden are the most advanced. They're talking about that only 2% of total value of transactions in Sweden are made in cash. All the rest are digital in different ways. I think this is kind of like a picture that sums it up in what's happening in China. You can see that the way that he's getting this guitar player is getting them, I'd say, money is by QR code. So it's kind of interesting. And I think that if we kind of try to do the mix and match of the different kind of payment technologies and the developments and the fundamentals of money, we can kind of like start asking ourselves, where is this all leading to? And when we're talking about money, we're talking about cryptocurrencies. And that kind of leads us to one of the most interesting areas in fintech, and that's, I'd say, the change in money. And it started, the world started in 2009 with Satoshi Nakamoto, that nobody knows who he is, and he actually introduced two separate products that each one of them has a life of their own. Okay, blockchain, the underlying technology, has a life of its own. It's a separate lecture. It's a separate product that can live with or without the other side of it, which is the cryptocurrency. The Bitcoin that we all know, and the digital currencies that came after that. And it kind of like raises the question, or kind of like puts into question the main, I'd say, basic of what is money actually. And this is a good time for you guys to open your microphones and kind of answer. What do you think money is? What is money? Feel free. Maria, what do you think money is?
Money service. It's serving us to exchange something for something. So it's more than an asset.
Exactly. So what is money? Money is actually, if you look at it, it's a tool for human collaboration. Before money was invented, people would go and barter things. They would go to the market on Friday or Saturday or Sunday, bring their stuff, the tomatoes, the carrots, whatever there is, and start changing things. And money is actually a tool that was invented in order to kind of like help people, instead of carrying their carrots and their sheep, it kind of like enabled people to start bartering without needing to be at the same time in the same place with the products. Okay. And the first kind of currencies that were created were actually Mother Nature created, right? There was seashells, salt, oil, gold, things that were kind of like hard to find. And only in the recent years, I'd say 150, 200, 500 years, we're seeing more and more and more a paradigm that money is created by governments. Is that a given? Is that something that nature created? No, it's something that humanity evolved into. And we can look at the introduction of Bitcoin as a social experiment with the question of why would governments be the only ones that are producing or issuing currency? Why can't other bodies do that, right? And it kind of like changes the paradigm, because maybe governments are not the only ones that could be doing this. I mean, technologically, it is possible, right? And we're going to be talking about that a little bit more. But if I look at the snowball effect or the ripple effect of Bitcoin being introduced, we can see a big ICO rush, and a lot of digital currencies that were created in 2017 and 2018. We're talking about tens of thousands of them. Many of them lost their value throughout these last couple of years. But the thing is that technologically today, anyone here in this conference or anyone in the world could theoretically open or create their own kind of money, their own kind of currency. Okay, and if we're talking about I'd say economic kind of ways of looking at it, we can say that the long tail of users of the long tail of creating money has been opened. Okay, that means that now it's not the situation where only governments can create the money, but anybody can technologically do that. And kind of reminds us of the days of when YouTube was created and nobody kind of like knew like who would want to see 10 minutes of somebody kind of like creating a video, right? We're kind of at the same place. The technology is there. We don't exactly know what could be done with it or what's the use case of it, especially for regular people. Like why would there be what would be the incentive to create a Maria token or a Meirav token? Okay, but that could be something that somebody's going to be thinking about, and in a couple of years we're going to see a little girl in Alabama that's going to know how to use these digital currencies in order to create her own money, and she's going to be the next Kim Kardashian. And all of us are going to say, why didn't we think about this, right? Now add to this another layer that we're talking about money that is not only generated by humans, but it can also include information. And this is a crucial piece of the puzzle, because not only can the money be created, but it can be connected to something that is called a smart contract that was created a little bit later by a company named Ethereum, if you've heard about them. And the idea is that with the money, you can also send a contract that says this money can be used if these and these and these situations happen, and it can be burned if it doesn't happen. Okay, so kind of like the concept of money is kind of evolving. It's not just a mean of transferring funds from one person to another, but also something else. Now, if we said that it's we don't know what the use case for creating this kind of money is for individuals, there is a use case for creating it for businesses. And if we kind of take a look back, I think a year and a half ago, 2 years ago, Facebook came up with an idea to create their own digital currency, okay, called Libra. And they collaborated with, I think, around 27 different organizations, and they wanted to create their own different kind of money. Now, the question is, why would a company want to do that? And the first thing is, of course, they're taking the commission themselves or cutting the commission. They're also being enabled to reach larger customer bases, the unbanked people in the world, which are quite a lot of people. They can also collect, again, remember, the data. Okay, data is the new oil. We've been saying that for at least 3-4 years, but you can, when you have the money that's digital, you also know where it went, right? So you have the data, and that gives you power. Okay, enough power to kind of like make everybody angry. Remember that? People around the world, the governments around the world were kind of like going crazy. And why were they going? They were calling Zuckerberg to come and talk in the Senate, and and Libra kind of faded away, and then became Novi, and then became Diem, and they're still trying to figure out how to do this. But why were they so worried about having a company create digital currencies? And one of the major reasons is that if you have a company at the size of Facebook that has 2.7 billion people, and they are creating a currency, and it is backed by a basket of currencies, that's what they wanted to do, they're actually becoming not only a central bank, they're becoming the biggest central bank in the world. Okay, so that's why the regulators stopped it, and that's why kind of I'd say the snowball effect continued, because there are a lot of implications that could happen if everybody could be printing their own money, right? And some of them have to do with macroeconomic consequences, right? Because we all remember all of the macroeconomic ideas and models that have been built, and they're based on the assumption that the governments are creating currencies, okay? And the amount of money that is circulating in a country is a tool to fluctuate the economy, right? It's a monetary tool. So what happens if everybody can create money? What does that mean about the control of the governments over the monetary system? Okay, so all of these questions do not yet have answers. There are still no models. If any of you are economists and want to create models about how to run an economy with macroeconomics where anybody can print money, they're welcome to do it. They're probably going to get a Nobel Prize for that. But what happened after this evolved with Facebook was that two major things happened at the same time. One of them was that China started talking about creating their own digital currency, okay? A central bank digital currency for the Chinese Yuan. And another direction that this went to was that a question was raised, and the first one that raised it was kind of surprising that he raised it, was the governor of the Bank of England, Mark Carney, and he said, you know, why do we need the dollar as the reserve money of the global monetary system? Why don't we use something that is not created by a country, but rather created by a conglomerate? And you know, when he said it, everybody was looking like, what are you kind of like questioning the dollar as the reserve money? But that notion kind of continued to evolve in the World Economic in Davos Forum in 2020, and this came up and it's continuing to come up. And if you guys read the news, Russia is now talking about taking the dollars out of their reserve. Okay, so where is this going? And China a few weeks ago said that it wants to be the major reserve in the world. And this kind of started an arms race of different countries around the world creating digital currencies. Now, why is this relevant for all of us in payments? Because when we're talking about the future of payments in light of cryptocurrencies and digital currencies, we need to take into account that all of this can go in different directions, okay? It could go in a direction where all humans create their money. It could go in a direction that Bitcoin becomes the biggest. It could be the biggest currency. It could go that a different coin, the Libra coin or the Yam coin, is going to become the biggest one. It could also be in a direction where governments are creating digital currencies and the powers are shifting, okay? And us as payment providers, we kind of like need to think, how do we want to deal with all of these different scenarios, and how do we want to work around them and use the technologies that we have in the ways of payments and utilize them for different kinds of money, okay? One, or I'd say 2 points that are very interesting about the Chinese digital yuan. One is that they started putting it out, and the way they did it was that they gave people wallets to download, and they gave everybody a certain amount of money, something around, I don't know, like $70 for each person. But look at the nice thing. They gave the money, the $70, into the wallets of people. But if the people did not use that money in a certain amount of time, let's say 2 months, they actually took it back from them. Okay, that's an interesting thought. Like, can money be taken back from me? Like, what's what is I'd say the shift of control about the money that is mine? Not only that, the Chinese government also said you can use the money in these and these and these stores, but you can't transfer it to other people or buy other things than what we decided for you. And if you do that, the money's, you know, it disappears. Okay. And remember that we said that what can be collected along with digital money, and that's data. Remember the scoring system that you have in China about how people behave? Now connect these two systems, that you have a credit system for social behavior and what you are allowed and not allowed to pay with the money, okay? Now the ideas and different directions that the developments in the money are taking, and the developments in who is creating the money and what it's used for, and I'd say who is issuing it, kind of like can take a forward look. And I think that one of the most interesting developments that we've been seeing in the last 2 years is actually a patent that Microsoft applied for about 2 years ago, where they actually this patent talks about the ability to create a cryptocurrency or a currency system that is based on body activity of humans. Okay, that means that when a person does a certain set of behaviors, let's say moves his hand, talks, reads, whatever that is, then a cryptocurrency that is waiting to be created will be created according to the signal that this has been done. Okay, now I don't know how many of you have seen the movie In Time, but this is like a very interesting development. And what will that mean in regards to how the money is transferred? Okay, and how are people going to be doing payments based on this type of money? Okay, are the tools that we have right now, are they going to be enough? Are we going to be needing to create new kinds of tools? Now, an additional perspective, I think that it's important to take a look at is who are the players and who's dealing with this, and how is the I'd say the traditional financial sector dealing with all of these new developments. And until about half a year ago, I think we were seeing like kind of like ignoring or kind of like dealing with Bitcoin as, I'd say, the bad boy of finance, right? It's kind of like out there, and the traditional finance did not really want to deal with it. And then a few things happened at the same time. I think this was somewhere around November, if I remember correctly. And suddenly major players in the financial industry decided that Bitcoin is interesting. Okay, PayPal came and said you could start, transferring funds on with Bitcoin. Robinhood announced that it could enable activity with Bitcoin. Elon Musk started tweeting things. And what happened was that suddenly we saw Bitcoin starting to change direction and suddenly surge in its price. Okay. Now, I don't think it's only these things that kind of created this development in the price of Bitcoin or the adoption of it, but there are a few things that are happening on a global level that kind of enabled this to happen. One of them is the very, very low interest rates that we have right now in the world. Okay. And second of all, when people hear that the price of Bitcoin is going up, of course, they want to come and join. And third of all, they're actually looking at this currency as a type of investment. Is Bitcoin a type of investment, or is it a currency? And these two things kind of like, on the one hand, you can't be both, because if your price goes up and down, it's not a very good means of payment, right? So that's kind of an issue that needs to be taken into account. And of course, the regulators need to come and, give their thoughts about this. Is this real money? Is this a real payment? Is this an investment? What is happening with this? And again, we're seeing how this snowball is getting bigger and bigger and bigger. Now, another aspect that has to do with payments is, and these kind of cryptocurrencies, is where exactly is this digital currency stored? Okay, if we're used to seeing traditional money being stored in banks, we're suddenly seeing, what these are. These are discount keys, or I'd say wallets, where people are keeping their digital currencies. What does that mean? As a payments provider, do you also need to not only enable payments, but also enable, I'd say, a wallet that holds the money? Okay, what does that mean for a payment provider? Okay, is this another way that you need to kind of go? So I think we're kind of like coming to the end of our talk, right? Am I correct? We're kind of like the time is almost ending. I think we have like 5 more minutes.
Yeah, you have 10 minutes more, so feel free.
Nice. Okay, so we even have time for questions. So I think that if I kind of like sum everything up, and if we kind of like take a look at the different aspects that we talked about, and we're kind of like trying to look at the effect of cryptocurrencies on payments and on the payment industry, there are a few points that we need to stop and look at, okay, and to take into account when we're developing things or looking at the payment industry. First of all, the first point is that data is moving along with the money. What are you doing with the data? If you're a payment provider, are you keeping that data? Are you using that oil? Are you utilizing it? Where are you taking it? Okay. Second of all, the players that are now playing in this field are different. China, Microsoft, Facebook, Google, Amazon were not players in the financial industry 20 years ago. They are now. You're competing against them when you're a payment provider. Okay, and I'm not even talking about Apple Pay and Google Pay and all the rest of them that are kind of like, we're all used to them. But these are things that were not around a few years ago, right? Third of all, what is going to be the reserve currency? Are we still going to be talking about dollars in 20 years from now or in 10 years from now? Is it going to be something that's like an old-fashioned thing that happened? Is the dollar going to be finding a way to become a digital dollar and refinding its place in the world? Who is going to be producing this money? Okay, the money that we're going to be transferring as payment providers. Is it going to be governments with central bank digital currencies? They're called CBDCs. Okay, are they going to be company created digital currencies like Libra that we saw, or the Microsoft body activity currency? Or are private people going to be creating their own currencies? Are we going to have multiple different kinds of currencies that are going to be enabled on payment? And when does I'd say the money transfer happen, or the change in the types of money? Okay, when does that happen? Does that happen in the moment of payment? Does that happen before? These are all things that need to be like, these are types of things that payment providers and creators need to be thinking about, right? Another aspect is, where is this money going to be stored? As a payment provider, am I also going to be giving a wallet? This is, cryptocurrency suddenly introduced the world into a different type of bank. Okay, what does that mean for payments? Okay, where's the money going to be stored? How are you going to be connecting the different wallets, because different people are using different wallets? How are you going to be connecting it to different payment methods, right? And what happens if the money comes with a contract attached to it, with smart contracts, right? How are you going to be storing that? Okay, how are you going to be using that when somebody is paying? Okay, I think that the main question that kind of arises with all of these things that are happening is, I'd call it like, which of the various technologies is going to catch up as the main method of payments and the main method of money? And it's kind of hard to tell, because right now, there's so much happening, and we're going to see this only, I guess, when the dust kind of settles. And remember that this is just, a small fraction of what's happening in the financial industry. We're just, we just looked at this little corner here. Each one of these different corners are affecting the financial system in different areas. Okay. But I think that one of the interesting things that we are witnessing is that we're kind of, we might be seeing the next step in the evolution of money. Because if I look at like an historical perspective of 10,000, 20,000, 100,000 years, money has started as bartering, and then it became earth created, I'd say natural resources created currencies with gold, and then you'd have the government created money. And what are we seeing now? Bitcoin is a digital currencies. Is it going to be created according to body activity? What kind of money is it going to be? And if somebody wants to kind of like think about money in a different perspective, they can go back and look at the movie In Time and see the different kind of wallet that people had in their body for the money. Is that something that we're going to be seeing in a few years? I don't know, time will tell. Any case, it's interesting to see how, one innovation or two innovations, and I'm talking about Bitcoin and blockchain, have kind of created a ripple effect on so many different levels that we're still kind of in the middle of what's happening around us, and we don't even know where all of this is going. And this is the time for all of you guys to ask questions. Now we can open a conversation and think about the different aspects of where all of this is going. Thank you.
Thank you so much, Meirav. Very exciting times we are living in, right?
Yeah, I think so. I think so. We're kind of like living in an historical time that I don't know, I actually didn't say this, but I like finishing with this quote by Gordon Moore. He was one of the founders in Intel, and his sentence went like this: that change has never happened this fast before, and that will never be this slow again. So I think that we're kind of like lucky to be in a time where changes are happening so fast, and we can kind of like witness a change in, I'd say, evolution in so many paradigms, and they're all happening in such a short period of time. So yeah, I guess it's very.
I agree with you and with the author. Well, I'm checking here, and we have two questions. One that was made just now, and the other one that was made in the beginning of the discussion. But actually, I think it fits for the topic that you brought here. So the first one is: don't you think that cryptocurrencies may replace someday all payment methods? What do you think about this?
Well, first of all, I don't think any of us have the ability to look into the future and see that. And if we would be betting on the right stocks and becoming millionaires, right? So, but we can be looking at who are the players and which way they're pulling. Okay, I'd say that if the regulators and the traditional financial system doesn't catch up fast enough with what's happening, and I'd say advocate their interests, then yeah, we could be seeing a place in the future where digital currencies are the method of payment and banks are actually will become obsolete. That is a scenario that could happen. But I think that it's far-fetched, because I don't think that the traditional financial world, the regulators and the banks, are going to go down without a fight. Okay, and what we're seeing now with first of all, central banks creating digital currencies is I think a first step of the regulators understanding that if they don't start playing this game of digital currencies, somebody else is going to beat them to taking dominance over the financial markets. So they're kind of trying to I'd say create hybrids maybe, and they might be trying to stop innovation from happening, but we all know that innovation is very hard to stop. Okay, so I don't know if they're going to succeed with that. And we are seeing movements in the traditional finance in regards to adopting digital currencies. So I think it's very hard to tell, because these are such strong forces pulling in different directions. It's kind of like betting on the winning horse, like which one of them is going to be the strongest, and they're all very strong horses, right?
It's true. So the second, thank you, Meirav. The second question I have here is from Natalie K, and she asks: may we have inflation using cryptocurrencies? You've talked a bit about it, but if you'd like to explore more, Meirav, please.
Yeah, I think that not only inflation, I think that if we're kind of like looking at digital currencies as from a macroeconomic perspective, we can see many different scenarios, like I mentioned, that were not perceived when the macroeconomic models were created. Okay, yeah, if everybody starts printing money, what's the value of that money? What's the value of a government created money? I mean, if Facebook creates a digital dollar and backs it with dollars or something like that, or backs it by gold or something else, right? Is that going to be more valuable or less valuable than dollars? In comparison, of course, to a different token, let's say a different coin, right? In comparison to Bitcoin, are there going to be like two exchange rates between the Facebook currency and euro or Bitcoin, and in comparison to the regular dollar? Okay, and how many dollars are going to be circulating in that kind of situation? Twice as much. What does that mean in regards to inflation rates, right? And how do you stop inflation if you can't stop if you can't use the monetary tool of printing or not printing money, right? Okay,
there's a change of regulation here as well.
Of course, it's not only change of regulation; it's a change of perception, of paradigms. Okay, the whole fiscal models are actually being questioned. Okay, everything needs to be recreated the moment that people have the ability to just create their own money. We're not at that point right now because people are not doing it because they don't have a business model for it. Okay. And when Facebook comes and says that the regulator can stop them, but what are the regulators going to be doing when Maria creates her own token and Meirav creates her own token and a school creates its own different token? Okay, how are they going to stop that from happening? It's like trying to stop information going on in the internet. It's not that simple.
It's not.
Okay. No.
Probably impossible by now.
I don't know, it's like forces that are pulling. I was a few weeks ago in a different country and they actually didn't enable having conversations on WhatsApp. They managed to find a way to block your ability to talk on WhatsApp. You can't you can't hear what the other side is doing. So technology is developing in different directions. What if these forces, don't want the power to be shifted into Bitcoin or other currencies? Are they going to be using different technologies to block this? I don't know. Every scenario is kind of open. Again, we're talking about a lot of different bodies with a lot of power and money, and different interests.
True. Another question here is from an anonymous attendee. It goes like, should we use stable or not stable cryptocurrencies? What do you think about, Meirav?
Okay, the question is, what do you want to achieve? Okay, if you're looking to create, if you're looking at cryptocurrencies as an asset, as an investment, then of course you don't want stable ones, right? You want the fluctuation for you to make money, right?
Of course.
But as a means of payment, I don't think it makes sense to have a means of payments where the value of it goes up and down crazily, because today you could be using 1 Bitcoin to buy a pizza, and the next day it would be worth a helicopter. That doesn't make sense, right? Yeah. So you can't. It kind of like it's an or situation. Either a certain digital currency is it fluctuates, and then it means that it can't be a payment method, right? It needs to have some sort of stability and very low fluctuation in order for it to be I'd say a currency that is worth paying for, because otherwise the value of what you're getting, you could lose a lot of funds or assets if you're using something that's not stable, right? So you don't want to use it. I hope that answers the question. I don't know.
I think you did. And the last, I don't know if it was what our attendee would like to listen, but he did.
But they can open the microphone from my point of view and ask it in a better way, like in a way that enable me to answer in a more
directly,
direct answer. Mm-hmm.
Well, we have here one more question. It says, hello, everyone. In some articles, we read about that Ripple is a centralized currency and the future of the banking system will be built on a transaction based on Ripple. What can you say about it? How do you see the bank payment system, centralized or decentralized?
Oh, this is very interesting. This is a really good question. All the questions are really good, but this is a really interesting one, okay? Because this is kind of like goes into the point of how will the traditional financial world shift into the new technologies. And if we kind of like look at that point, we can see that the outcomes can range, like, there's a whole rainbow of possibilities, right? One possibility is that the banking system is going to continue with its own way and it'll become obsolete, okay? Because people are going to be using the different systems that now exist for Bitcoin or for any of the 10,000 digital currencies that have been created, okay? The other side of it is that the banks are going to step up and say, you know what? We're using these technologies, we're taking the paradigms, we're taking our old computer systems. One of the problems with traditional banking is that they are based on mainframes and on very old systems, legacy systems that do not enable them very easily to kind of like shift into these new technologies. But assuming that banks are going to come and say, we're closing and throwing these old systems away, and we're moving on to the new technologies, quantum computing, or combine quantum computing with blockchain. You can create crazy things, right? What system are they going to be using? Are they going to be using Ripple? I don't know. What if NASDAQ comes out and says that we're creating a blockchain system that all of the investments are going to go around? What if the central bank of I don't know what, of the United States, or the central bank of any other country is going to be saying, we are creating the blockchain system where the information is stored in different places, just like the banks themselves. Would that override Ripple? Would Ripple be able to deal with that kind of situation? Can you guys hear me properly? It says that my internet connection is unstable. No. Where did you stop hearing me?
Yeah.
Can you hear me now? Can you guys hear me?
Now I'm listening. Sorry.
Yeah.
Yes,
Can you
I
guys
hear
hear
you.
me now?
Well, yeah.
Okay.
Yes,
So-
yes, we hear you.
Okay, so I think that the question that was asked about Ripple specifically needs to be answered in the question of, is Ripple going to be taking the whole market? Do they have the power to move the whole traditional financial system to blockchain if there was a competitor that comes from a central bank of one of the big countries, or a coalition of the different banks working together, or if PayPal itself or one of these, I'd say, more advanced financial providers would create their blockchain and then connect everybody to it. Right now, Ripple kind of like talked about itself 2 years ago as being the solution for banking. That doesn't necessarily mean that the banks are going to go out, work with it, right? There are a lot of different players in this field. So I guess that's my answer for that, for Ripple specifically in the banking system.
So we have everything open until decisions are made.
Not only
Right.
is it open until decisions are made, I think that there's room for extra players. Ripple is a player that's been around for what, 3 years, 4 years? Okay.
Yeah.
At least. Who says they're going to be the winners? I'll remind all of us that when the internet came out with the new technology, the first players were not necessarily the winners. Okay. Remember AOL? It came before Google. AOL is nowhere to be found. Google is now the search engine that we're using. Okay. So it doesn't necessarily mean that whoever was first is the one that's going to be taking the jackpot. It means that whoever is better has the jackpot, right? So it could be Ripple, it could be anybody else.
It's true. Well done, Meirav. So nice to hear you.
It's a pleasure. It's my pleasure.
So we don't have any more questions in here. I don't know if there's anything that you would like to add to finish your presentation, your amazing presentation.
Thank you. That's nice of you. Well, I guess I'd say to different players that because the playing field is so open, it's really open for smart people and smart technologies and smart implementations to come and enter this market. Nothing is set. That means that it's an open playing field that any one of us could decide to join and create revenue. And I'm going to be talking about a specific point if I have those 2 more minutes, and talking about women. Finance and technology historically are domains that are dominated by men. But this new world that is being created, nobody knows it. Everybody that's joining is a new entrant, okay? And everybody's learning it. Men and women can learn the same amount, right? So I think this is a really interesting chance for women. This is me speaking with the head of EWPN, the European Women in Payment Network, okay? And advocating women, pick up this opportunity, enter this wonderful field of financial technology and fintech. Everybody's new in it. Just come and learn it, and you can, go into this new field and not leave the world in the hands of men. Can I say that?
promoting diversity wherever
Yeah.
we go.
Yeah. I think that's part of our job, isn't it?
It is. Thank you so much for everything,
You're
Meirav.
welcome. It's my pleasure. Take
Thank
care.
you. You too.
Bye.
Thank you.
Bye for now.